We have Deepak Shenoy as well joining us on the show. He'll join us very shortly to talk to us about the fundamentals of the market and what else lies ahead for the market right now. We're just at the cusp of the earnings season, Deepak, and seems like the provisional updates that have come in from the sectors, whether it is FMCG or real estate for that matter, they continue to be quite strong, and clearly the street is rewarding even Voltas and InfoEdge for that matter. Banking names, however, have reported a bit of lukewarm numbers, maybe barring a HDFC Bank. Do you think that's just the indicator of what lies ahead for the banking index for the rest of the year as well?
To be fair, I think even HDFC Bank numbers were not so great. It's difficult to compare a pre-merger and a post-merger bank, and honestly, just marginally, I expect the margins to be under stress for the next few months, for the next few quarters at least, simply because they have to get rid of some of the higher cost liabilities they have, and keep the the book growing. But in general, I would say banking would be not such a favorable sector in the coming year, simply because their largest growing part of the business, which was retail loans and relatively unsecured loans, whether it was credit cards or unsecured personal loans, they were growing at one of the fastest rate, and RBI is trying to curb that activity as much as they can. Meanwhile, we're seeing industrial manufacturing growing at a much faster pace, relatively low debt levels, some capex, some even internally funded capex rather than borrowed capex. So if the growth sectors in the economy are not taking credit meaningfully, and if the things that are growing are sought to be curbed by the regulator, I would expect the banking system is not going to be in as much in favor from an equity perspective. And in comparison, the industrial manufacturing and the related areas will be relatively more in demand. So our portfolios are skewed more towards the industrial manufacturing and relatively more domestic economy focused companies than the banks.
Uh, Deepak, do you think that there is still a lot of FOMO crowd which is still left, because a lot of market men in the month of March they sold out? I mean, there was an all-out call that okay, valuations महंगा hai, bubble, trouble, 2008 repeat, regulatory concerns. I mean, everybody got scared. A lot of people were shaken up. Nobody thought that we actually would see a vertical decline and a linear rally. Do you think in this rally, while prices have gone up, participation levels are abysmal?
I think I was actually talking about this for a few with a few friends. Some of them disagreed with me. I think there's still a lot of fear on the streets. Now we'll have to figure out if that really is true across. I see when I talk to people, more or less people telling me the same thing. India is expensive. The mid caps and small caps are expensive, and therefore should we move to large caps or should we move out of equities? Is momentum losing? Is being lost in the markets? I have two things for that. First of all, I can't predict when momentum will go away from markets, but I don't see signs, traditional signs. Usually, when people, if it is a sign of euphoria, everybody's telling you to buy stocks. Not that everybody is asking you whether it's the best time to sell, or is there that they would like to get out. So it's not the same euphoric feeling that I have seen in past extremes. The extremes are not even an extreme. If you look at the P ratios of small caps, median P ratios, they're roughly the same as they were in 2019, although the prices have gone up 3x. So the earnings have also gone up 3x in that context. So there is an earnings multiple, earnings multiple being the same, and earnings having expanded at the same time as same size as prices. So I don't see this as a meaninglessly expensive market. But I also feel, you can make that call after you see this result that is in March. It's usually a big one, especially for infrastructure engineering sort of companies, where you'll find a bulk of their orders, bulk of their results kind of pent up in March, in the March quarter. So based on that, you could take a call on whether this is expensive or not. I don't think it is. I think the fear in the space is primarily because of as many, I think both media and articles and things that kind of make you feel that this is more expensive. It's perhaps more expensive than China, but China isn't growing at anywhere close to the pace we are, especially in certain pockets. So I think and you can't really meaningfully invest in the Chinese market either without they don't care about foreign investors at all. So from that perspective, I think India remains favorable, at least in my view, and there isn't fear in the there's only fear in the streets, not greed, and not as much greed.
Right, okay. Deepak, hold on to that thought. Let me quickly take it across to Ansh. It's pretty lively a market and a lot of volume buzzers. Ansh has been noting them down. Ansh?
Right, so starting with Exide Industries, the stock is in focus as it has given a breakout from its key pivot high of 350 level with volume of over 28 times its 10 session average volume. The stock has also registered its biggest single session gain in over 2 years. Apart from this, Bandhan Bank will also be in focus as the stock has actually given a breakdown from its upward sloping channel, but it is trading near its support base of around 177, 178 level. The stock has also reported volume of over 4 times its average trading volume of last 20 sessions. Lastly, REC will be in focus as the stock has given a breakdown from its rising wedge chart pattern and it has also slipped below its 20 and 50 DMA, indicating negativity in the stock. So keep an eye on the stocks.
REC and Exide, we've discussed that time and again. Deepak, where have you been shopping of late? In this March fall, where did you pick your spots?
We haven't done a whole lot of selling and therefore not so much of buying either meaningfully. Some focus in some of the power sector names. We haven't finished buying, so I'm not naming a lot of this. There's whether it's transformers or companies in the power space, high voltage DC area. I think there's going to be a lot more attention here going forward, and not just because of electric vehicles, but overall electrification as a theme. We're going to see a lot more activity now downstream in transmission and therefore in the equipment related to transmission as well. That's the kind of it's a kind of a capital good in that context, but here there will be both the services and products which will make a difference. We've been very interested in hospitality. I think I might have missed the bus somewhat, though we did invest in Indian hotels a while back. There is a bunch of around the transport, the hospitality industry, including leisure hospitality. Really, that is making a lot of moves. We're finding this. I thought this would be a short-term phenomenon after COVID, but you can't find a hotel room anywhere. You travel everywhere, the airports are full, airlines are full. No matter how many airlines they are in a sector, they almost always seem to be full. So I think something has changed. It's a premiumization of, in the sense, travel and tourism. And it's also in that sense bigger margins for these players until they get competition to come in. So these are the two themes I've been looking at closely, buying a little bit, but we'll wait for March results before we make our final calls on these.
Hospitality is a trend. I think everyone is, witness to the kind of uptick that we have seen in the prices, in the occupancy and all of that. But Deepak, what's your view on Nykaa and Voltas?
I don't have a view right now on Nykaa. I think the domestic consumption story is good, but the problem is the brand is relatively higher price. They've slipped back in terms of their numbers into what used to be were looking interesting from a profitability standpoint to not so exciting again in that respect. I think some of the other startups that listed in that space, not in this space of course, but roughly around the same time, they seem to have done a better job in terms of trying to move into profitability, at least at the book levels and also at the cash flow levels. Nykaa doesn't have that same, that same concept going for them. So not interested. We'll wait again. March results might be might be dramatically different. Voltas, Bangalore is so hot. You just want to buy any AC company. It's probably the hottest it's been in a while. But ACs in general, I think, are this darlings of the stock market for 2 months. And hot weather in almost always results in a much longer rainy period, at least in Bangalore. So you end up with whatever people will do in terms of buying ACs becoming a not so much a buying experience in 2 or 3 months. So I think it's a short-term phenomenon. Voltas is a good company, but I won't buy it just because of one hot summer.
Okay. Deepak, have to ask, closer home, you've got TCS coming up with numbers, so much rejig happening at Wipro. What's the fate of IT in the quarter ahead?
I would keep very low expectations, Aisha. I think this is not a quarter where you're going to want to say, oh, the fortunes have changed. I feel, at least from what we saw in Cognizant recently and what we've seen in US commentary in general, that the companies that are actually trying to invest more into this space are in general in tech and services. I think they're going to take a pause to see how the impact of various new technologies from AI to a bunch of others will change how the landscape is. I eventually expect the Indian IT companies to thrive even in the land of AI and so on, because there will be still a lot of work required, human work required. As we found out recently, for instance, Amazon said that they have these shopping experience where you don't need human beings, and they can just pick up their items and then put them in a cart and just walk out, and they automatically get billed. Turns out, they had 1,000 people in India watching cameras and making note of whatever people were purchasing just to back things up. So I think it's interesting that you might have a lot of work that is that looks like it's completely automated, AI based, etc., but you might still need a large amount of workforce, maybe in countries like India or maybe in different geographies, to back things up. So I think for the near future, I don't see this as a tremendously limiting mechanism. I expect all these IT companies to gear up. But in the coming 2 or 3 quarters, they're not going to get that visibility. So they're going to have to build the capabilities and then harness them. So expect very little from IT this quarter. If they show me 10% year-on-year growth, I think I'd be kind of happy. We do have some small investments, but that's for the longer term, not this quarter or the next.
Doing well today, banks are not doing well for sure. What's not doing well today? Bandhan Bank, 6.5% down. Very little follow buying in HDFC Bank. Very little follow buying again in a Kotak Mahindra Bank, Indus Bank. These stocks are just not going anywhere. One stock which has had an outstanding run up of late has been Indus Tower. We've discussed this, Kunal, on and off, right? It's a stock which we talk about it and then we move on. We don't consistently talk about it. Where is this stock headed?
I think this time around the stock for a positive change looks to be very, very interesting because earlier what used to happen is that in terms of a price characteristic, Indus Tower and Vodafone Idea, they used to move in tandem. So any news flow affecting the stock on the positive side, for example, for Vodafone Idea, used to have a positive effect for Indus Tower. But this time around, it's been just solely a stronger move for Indus Tower, devoid of Vodafone Idea, which has remained into a range. Now, particularly for the stock on the charts, I would believe that the breakout post at 300 levels has been a turnaround or a critical breakout for Indus Tower, because post that is we've seen the stock raising up the supports from an earlier level of 250 to 55, and that's a significant jump for a stock. And that indicates that on the upside or on the move upside, the stock would probably scale past about the levels of 350, which could again be a multi-month, multi-year high for Indus Tower. So the momentum looks quite strong. There have been minor bouts of consolidation closer to the 300 levels, but I believe that should be considered as very good entry point for someone who's looking to buy the stock even at current levels.
Right, okay. Let's also get the chatter across dealing rooms, and Sharad is here with all the cover. Sharad?
Well, yes, in focus is Nuvoco Vista's cement player, especially in the eastern region this company is based out of when it comes to their volume sales. And importantly, what we are hearing from dealers is that domestic institution buying has caught up over the last 2 trading sessions. Even the volumes have picked up over the last 2 days. Now, importantly, 7 lakh shares have actually exchanged hands over the last 2 trading sessions. That translates into 0.2% equity stake. And importantly, the key DIs already invested in the company. They include the names such as SBI Mutual Fund, Mirae Mutual Fund, as well as ICICI Pru Mutual Fund. Now, also channel checks suggest that for the month of April itself, for the eastern region part, the company has actually undertaken a price hike in terms of the dealer pricing, and that has actually gone up roughly 15 rupees per bag on a month-on-month basis. And even on a sequential basis, there has been a hike of roughly rupees 9 per bag. Now, importantly, 70% of the volumes actually comes from the eastern region as well. So a strong domestic institution buying is coming, and also interest coming in certain HNI categories as well when it comes to Nuvoco Vistas.
Okay, so that's about Nuvoco Vistas. But Nuresh, do a chart check for us on some of these cement names, because there was that report of a price hike being institutionalized in the month of April. Then the stocks had run up. Today as well, there's a decent amount of buoyancy there. Which charts would you suggest from the cement pack?
So it would be Ambuja Cements and ECC. If you look at Ambuja Cements, it topped out around 600 back in 2022 and fell all the way to 300, 330. Now, finally, the stock has sustained above the 600, 610 mark. So a new long all-time high. So looks like a momentum trade here. Same as the case with ACC, which still has to catch up to that 2750 high, which was made almost 4 to 5 times over the last 2 years. So that could also break out. So the risk reward is great in these two names out of the whole cement pack.
Right, okay. That's the take coming in on some of the cement plays. Continues to be Exide. By the way, now clocking a solid 19% of a move, no less. There's Eicher, there's M&M, Maruti. Autos have really come back with a vengeance. But Deepak, we've been discussing about, the boom in the auto pack for a while now. Would you still say there's value on the table and there are still names one can maybe add positions to or even buy afresh?
Honestly, we have a position in M&M, so quite biased there. But that part of that is because it's not just an auto company, right? They've got a bunch of other investments in industrial manufacturing, in defense, in a bunch of other sectors. All of them come under this massive holding entity, which M&M is. And we're hoping that at some point there will be some kind of, some of the parts being greater than the whole, kind of either as a demerger or as some kind of value unlocking that will happen at M&M. On the others, I think the two-wheeler pack should do well in the coming few months, simply because if we have elections, and elections means money goes to the rural sector means they buy bikes. That's the typical thought process. So I think, the two-wheeler sales should start coming back at least towards, the next, in this coming quarter. As things go forward, I don't believe, however, that a lot of the fortunes there also depend on the monsoon. So if the monsoon has vagaries which affect it, then we could have some kind of a surprise on the negative side there. On four-wheelers, I still think personal vehicles seems to be going quite decently, not super strong. So while I don't understand the growth of Maruti, the M&M and Tata, at least the sales numbers seem to be very, very exciting. So that I think that remains something that is quite exciting for us. Though Tata Motors has a different, its India business is relatively small compared to its global business and the larger balance sheet they have. On the commercial vehicle side, I mean, we haven't seen so much activity recently, but again, I'll await results to see whether we're seeing any kind of a upward bump because of capex increases that have been happening recently. I think we do expect that to kind of help that industry. So overall, I do think auto has a good run in sales. Remember, the prices have also run up, so you got to be careful about what you buy, because anything you buy now can still see a 20-25% downside simply because markets correct a little bit. So you're paying relatively higher prices for them. But I still am excited about a few players. We're also into some auto ancillaries. We believe that as this growth comes in, some of the growth numbers will match their relatively smaller margins in comparison.
Okay, so selectively positive on the auto space, while of course across the board you shouldn't be expecting that kind of returns that we did last year. The markets for now have stabilized quite a bit. In fact, we are very close to that 22,700 mark, but doesn't look like we are going there in a hurry. But at least we have managed to scale past those record highs. Nifty Bank continues to be slightly iffy, so there's a gain of just about 100 points, I think, on that one. 110 point gain, but it is the broader markets that continues to outperform. Taking stock of some more movers right now, from the pharma space, you have Aster DM Health, which has been doing quite well of late. Gland Pharma is the other one to watch out for. Laurus Labs is actually also perking up, and AstraZeneca was just one of the stocks that we were talking about. Deepak, within the pharma pack, have you bought anything or something which is on the radar actively?
I'm honestly looking at the kind of returns that you're seeing in some of these stocks, at least the larger section. Even if you look at a Sun Pharma, for instance, quite exciting in terms of market returns. We have not seen any major change in the fundamentals, but sometimes that just happens. Prices move before the fundamentals. But we would like to wait for results this time to see how things pan out. We have no pharma companies, well, almost nothing in our portfolio has pharma. So maybe, I mean, a momentum which is more a tech, a quantitatively driven, price driven strategy will have some pharma names, but the fundamental portfolios don't. So I'm waiting to see. I think very exciting. We used to own a bunch of pharma earlier, but they've had a long period of nothingness. The only external factor that is not visible right now is what FDA actions may end up doing, because their inspections have started to come back. But other than that, I don't see any major bumps. We'll have to see results and see whether things have actually changed on the ground.
In the pharma pack as such, pure play pharma, but what about healthcare and diagnostics, hospitals, etc.? Because there at least the trend is of more spend, and the premiumization that we were talking about in terms of consumption is also partly has a play in the hospital sector as well and healthcare segment. What's your view there?
Absolutely. I think we own a hospital. I think we may own more going forward. The idea over here is that, like you said, it's the premiumization, the relatively, the higher demand for healthcare across the sector, whether it is, people using a lot, having a lot more issues with their health that require hospitalization. That seems to be something that has, earlier they used to just get treated at home. But over the course of the last 2 decades, we've seen a lot more people going to hospitals in general, and the hospitals themselves also gearing up and getting more return oriented in terms of for shareholders. That was not a process that we had seen very big earlier. So I think that's one of the reasons why, as a broad macro trend, hospitals have been exciting. I think that will continue to be the case. This year, supply is way less compared to demand. So whether it's at the premium end or at the lower end, I don't see that dynamic changing meaningfully at all. And therefore, if there is good corporate governance, shareholders and hospitals should see significant growth. We're also seeing, export of health services as a big thing going forward, simply because healthcare has become either expensive or not easily available in countries that are more developed. And therefore, as India shapes up in terms of, its presence and its processes being accepted worldwide, I think more medical tourism will come inbound, and also some hospital companies here are investing in hospitals outside of India as well to take their services there. So I think all of that will benefit the sector.
Is it time to bet on the chemical space again? And do you see any sort of balance coming by in the demand and supply situation? The stocks have been really beaten down, but at some point they got to make a comeback.
That's the hope, Aisha. I think it's eternal. It rings eternal, at least in this time in the chemical space. It seems to be worse than pharma. Pharma seem to have recovered a lot more. They both had challenges at some level of China. Pharma's probably less than in chemicals. And chemicals, a lot of things that were specialty and commodity have a significant competition in what China does. And to that extent, I think margins will remain compressed for the next few months at least, next few quarters at least. But surprises can happen. I expect again here prices will probably lead and fundamentals will follow. I think a long-term approach, because most of these companies don't have debt or don't have meaningful amounts of debt to speak of compared to the pharma crowd. We will actually see a better balance sheet help them as the markets recover, as the underlying chemical market recovers. But you'll have to wait. So if you have patience, I think this may still be a good place to play in. But companies that make, let's say, pure play caustic soda or something like that, that may not be the best place to place your bets. Because efficiencies there have a very little role to play. It may be in more specialized chemicals that you'll want to do something like set up your long-term bets. We currently don't have any. I don't know enough of the space to be able to say I can meaningfully track it years before it starts happening. But also, I'm in the lookout. We'll see the numbers, and as the numbers come in, I know we'll be late, but we might get in at a later stage.
Okay, let's see when and if that hope does actually hold true, at least for the chemical sector. Thanks so much, Deepak, for making time and speaking with us today. Time now to take the BTST trades from our technical experts. Kunal, what's the BTST trade?
So there'll be two buy calls. The first one is upon HEG. That's a stock. So HEG and graphite, both of them are heading towards a multi-month breakout for themselves. So would suggest a buy with a target of 2300 for HEG. Stop loss could be kept at 2000. And the second would be upon Wonderlad, a stock which I discussed in the morning with a target of 1100. Looks attractive. And my expectation is that now the stock could probably move up towards a higher zone of 1140 approximately. So revising the targets higher, stop loss could be till to 1030.
Okay, so those are the BTSC trades of Kunal. What about you, Naresh?
So first would be a buy on Eicher Motors, which has broken out. Stop loss at 4190, target price of 4300. Second is a buy on IDFC Limited, which has continued in momentum for the last few sessions. Stop loss at 119, target price of 125.
Okay, let's begin winding up for the day.
If you like this video, then like, share and subscribe to ET Now.